Well, markets had a rough ride yesterday, and the big question right now is whether the economy might be slowing down faster than expected. Hey everyone, it's Saturday morning, March 7th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. U.S. stocks sold off sharply as investors reacted to a surprisingly weak jobs report and rising oil prices tied to the escalating conflict in the Middle East. The Dow Jones Industrial Average dropped about 0.9%, losing more than 400 points. The Nasdaq Composite fell roughly 1.6%, while the Standard & Poor's 500 declined about 1.3%. And after another volatile week, all three major U.S. indices ended the week lower and are now sitting in negative territory for the year. Now, one of the biggest drivers yesterday was the February labor market report. Non-farm payrolls unexpectedly fell by 92,000 jobs, while economists had actually expected an increase of about 55,000 jobs. At the same time, the unemployment rate climbed to 4.4%, which added to concerns that the U.S. labor market might finally be cooling. So when you combine weaker job growth with rising oil prices, that's when investors start worrying about something economists call stagflation. Basically a mix of slowing economic growth and rising inflation, and energy markets definitely didn't help sentiment yesterday. Oil prices climbed above $90 per barrel as tanker traffic through the Strait of Hormuz remains close to a standstill amid the ongoing conflict involving Iran. That disruption is raising fears that Gulf exporters could soon be forced to reduce production if storage facilities start filling up. At the same time, geopolitical tensions escalated further after U.S. President Donald Trump said yesterday that the only path to resolving the conflict is what he called unconditional surrender. So overall, a pretty uneasy mix for markets right now. Weaker economic data, rising energy prices, and escalating geopolitical tensions. And that combination is exactly why investors turned more cautious yesterday. Alright, that wraps up today's Capital Markets Quickie. Join me again Monday morning for more market updates. See you then.